Good morning, guys. Hopefully you're all well. Getting some giggles out of the thumbnail today. I'm sure everyone is. In the background, Max has stolen the car that I used to own that was actually stolen from me. That's how I lost that car back in 2020. It was my Golf R. So Max has decided to bring it back. Allegedly, it was stolen and then transported to Dubai. Yeah, just like twin sister. So he is now accruing things from everyone. You got to watch this Max guy, dude. He's a little devious with all that hair over there. But yeah, so hopefully you guys are enjoying the humor of the channel, but it doesn't take away from what we do on the charts because we have absolutely been murdering price for the better part of a year now. So if you can hear it, they are doing garbage pickup today. I have my doors and windows open because it's finally nice in Kansas. So we may have to live with that because I'm not going to go close them. Sorry. Let's look at the charts, though. Max, anything to add before we hop into price?
I'll be closing them because of the smell, mate. That's all I'm going to say.
The smell? It smells good here. It's Kansas.
What, when they're doing the garbage collection?
Dude, we're not like you guys and just throw garbage on the streets. It's pretty clean here. Just to give you a heads up. Like, we all have our individual
all right, whatever.
bins and stuff.
Oh, is that just you guys? Yeah.
Yeah, I assume you guys are just throwing bags of trash out onto the street. That's what they did in Boston. It kind of blew my mind that when it was garbage pickup day and I was walking, because you walk a lot there, people just like open their door up and put bags on the sidewalk. I was like, what in the world is that? I was like, it's disgusting, to be honest with you.
Americans,
right? I was looking at, then I was thinking, like, there's probably so many people in this building that they can't all have an individual trash can. But, we should talk price instead of garbage collection. So, guys, key level we talked about yesterday. What was it? 29,873. We said this is the area on the chart we want to hold. I'm going to get rid of this fixed range volume profile for just a second. So we've got a very clear level of support here, and then Max was talking about some single prints, which I divided into two because there is a little collection right here, but you can see why. For me, they went down to 29,322.50 22.50 on my template. I don't have the same one as Max, so our settings are a little different. I have a different tick size, so there may be a discrepancy. Racine, Kansas is the armpit of America. I would actually argue that the armpit of America is Independence, Missouri, which is very close to Kansas, but to each their own. Anyways, you need to hold on to these levels. So essentially 29.8. So like I said, you could wick down here and take some lows, and that's fine, but we really can't be living below this because once we're into this single print, the drop to 29.3 is coming. And that's really not the end of the world. However, the moment you start not reclaiming that 29.8 level on a drop like that, you've probably got a bigger one down into the secondary single print coming in here. That does close out around 28.5. And where is 28.5 at? Well, it's the bottom of this box. It's your 6M2, and it used to be the previous day high here when we broke out, if you recall. We were talking about this potential trade opportunity that presented itself before finding support on, at the time, the London and Asia highs. But right here, you can see you came back, you swept the previous day high from the breakout. So this is old data, but that is where that single print's going to give you. And it makes sense because, this was your breakout point. So this is where the single print starts. Minor consolidation. So you have a discrepancy here of about $300 and then another one. So finding yourself back into these does start to put this in the potential of coming all the way back down to 28.5. The level I would put the most weight on is the previous week high and that June 22nd summer low at 28,726.50. This little zone right here. If you guys recall, that is where you will find our old range low from over here. Back in the summer, we had this level marked, and it was very good support and resistance. And if we go out to that range now and we take a look at where we are in the chart, we can start to say, okay, we need to hold that level. Why? Well, it just makes sense. Where was that? Summer dump right here, I believe. This is it. I've been wrong before, though, and I am going to be wrong. man, I got to put these back in order. I really got thrown for a loop when TradingView did exactly that. There we go. So this is your range dumping into here before we had our other prior range, right? So this is going to be the range you want to live in. I'm going to go ahead and now project it out just so you guys can see what I'd be looking at if I were trading this, right? In this fashion. You could say this is our channel. And notice our EQ is right at the POC, which is really nice. And what are we trying to do here? Well, this little blue box and this dotted line is the EQ of this channel, okay? So we can make this channel a little different if we'd like to. We could change it up like so, and we could change the background to be very bright or not bright. It's up to you guys there, but we'll keep it pretty not bright right now. We're going to keep it off pretty much. So we're at the EQ of our channel. If we're going to see the high of this, which comes in around 31.2, which I think at that point we'd still be looking up a little bit towards more of these highs right here, we have to hang on to 29.8. If we don't, I do think it is a quick drop down into probably the midpoint between, you know, range low and range high, which comes in at where? Right around 29.3. Then after that, we're looking down to the June 22nd low and the previous week high. So again, when we're talking about things like a weekly chart here, you know, the previous week high does matter. It always matters, right? So there's your previous week high and the high from the overall range. So that's the zone on the chart you want to hang on to. And we are coming into, again, important week for price. We did mention that already. Looking for the 17th of April to be a pivot point in terms of time. So we'll see if maybe this does put in some kind of a formal top after maybe pushing a little bit higher and then coming back to retest some of these levels. Wouldn't be out of the question, and it's not something that we can really say is going to happen as of right now. We have to trade the levels on the chart, but we should definitely be prepared for a scenario like that, that if this does continue to push to some of these higher targets, that we could come back and back test some of these range lows, because we have found our way back into an old range here. So if we did that, we got the blue boxes we were talking about. We're at this blue box currently. Push up. What do we do? Come back to support. If we lose that support, where are we going? Back to that June 22nd low and that value area low. And then locally, you have a really nice range already that's forming. I'll go to like the, I think it was on this chart. We'll go down to the 5 minutes. So we have our single prints and our one key level of support. Now we're going to look at the breakout, which occurred right here, and pull our volume profile over so that we can actually see what's going on in the profile. And you'll notice that it gives you a really nice local range to trade until we get resolution. So it's giving you plenty of trades. One of the trades that put in yesterday was you had a really nice gold pocket. Also the value area high of your local range. Boom. What are you doing at the support here? You're looking to see if you have bullish divergences coming in. I would imagine we did on these higher lows. Break back above the VWAP, go to the range high, right? And then once you got to the range high for the CPI data, this was where things were really, really nice. We were actually trying to keep up with the price action in chat, which can be difficult. But what you'll notice is you came back to essentially the point of control and your gold pocket. And then from that gold pocket, you went straight back to your local gold pocket again at the value area high. So you went from value area high, gold pocket, point of control and VWAP, back to the value area high, gold pocket. Now you're looking at this saying, is this going to rotate the range in full? The short here would have been the play. A short up here could have been a play as well if you want to fade the move, of course. But by and large, you are range bound. The places you're going to want to be involved in price, in my opinion, are going to be at the key inflection points, which for here, I normally don't trade the middle of the range, but the gold pocket, VWAP, and the point of control, you have three confluences. It's not a bad trade. You just have to know that you are still range bound and the value area high is here. So you're looking for shorts there. And where do you take that? You take it back to your mean reversion again, VWAP, again, point of control, and then breaking down below the gold pocket that was there. So really, really fun price action if you're into fast-paced intraday trading. That's really the breakdown. I'm still looking for these higher targets, mainly because we have no reason to think we won't get there just yet. However, I'm not going to deter myself from taking shorts out of this region of the chart at these local highs just yet, as I think we could remain range bound. And also eventually, if this does do any kind of mean reversion below 29.8 and take out some of these stops right here to fill in this single print, and I imagine people are starting to move their stops up pretty aggressively, it could open up for a nice intraday that could turn into a couple days short trade that might be lucrative. However, I would take profit locally first if you do something like that. If you get a short entry from up here, I'd lock in some profits. And then if you get stopped out, you get stopped out. It's not a big deal. But yeah, that's how I would trade it. Certainly only looking for, longs if there's a setup, and that would have been right here, right? So you had a nice long setup here. You had a really nice short setup on the swing fail of the initial high right here. You didn't swing fail right here unless you look at this high locally, but you were at the range high, and as you found reacceptance, you did get a secondary opportunity to short again, just like you would have gotten one here. So if you missed the swing fail of the first local high that we put in on the range, as we put this range in, you had the opportunity at the gold pocket and at the value area high of your range, again, giving you that secondary opportunity to get in a short and then rotate it back to support. And obviously you want to be out of that position coming into this, especially after seeing higher lows, reacceptance into your range, reclaiming the VWAP. You've got to, you either have to have your stop loss at break even, or you just got to be comfortable with taking maybe a little bit of drawdown on your position if you didn't lock any, profits in, which I think most people did, though. Most traders are pretty good about locking in profits, I would imagine, right, Max? People never just all or nothing their positions in crypto, and they always have a stop loss. So,
what markets are you looking at? Sorry.
yeah, we are going to talk Ethereum today, by the way, because it is the Shanghai update. I believe that's proof of stake upgrade. Everyone said this is a bullish thing. We're going to look at the charts and see what we think. But yeah, that's what the thumbnail was for, a little Vitalik Buterin action for you. But I'm going to turn it over to Max, let him go through order flow, as I am just repeating myself. The targets that I have for the upside, if this range does resolve to the upside, are still 32,392 to 32,903. I would be aware of about 31.2 to 31.5, though. That is going to be an old range high. Also, I believe that is the yearly VWAP close. Going to pull out some stuff we never talk about here. And there you go. So there's your yearly VWAP close right here. And it's 31.6. So I would be aware of this if I were somebody that was watching things. The yearly VWAP close from 2022 into 2023 did occur here, 31.6. So, and if we pull this to the left, let's see if there's any confluence. Boom, look at that. Absolutely crushed this local high, was resistance. So I would have it on my chart as potentially a pit stop, in case we don't rotate all the way up to here. But, enough of that. I'll let Max get on to order flow here about 12 minutes, 50 seconds in.
I like that level a lot, to be fair.
Yeah, the yearly VWAP close.
It's not one I would have thought of, but considering I trade the previous day VWAP close all the time.
Yeah,
definitely going to keep my eyes on that one.
I've been watching the monthly VWAP closes just to see if they're respected. I've been using them on some altcoins, and they actually been pretty good. So I'm going to keep an eye on that yearly VWAP close if we get into it and see what happens.
I wonder if you can do it on Exo, where you can have. I don't think you can change
VWAP closes for those sessions. You might be able to.
I know you can do it for the previous day and the intraday sessions, but I'm not sure about anything higher. I imagine if you played around with it, you certainly would be able to, but that's pretty decent. But yeah, today, other than the trades you had last night, which were so easy, SFP, only trade you need, straight into the gold pocket there. Magic should have gone over these, but yeah, two really easy trades, to be honest with you. And then price action was dirt all day. We had a point in the day where it took 23 minutes to make a $1 million candle, which is abysmal. So, not really too much to go over throughout there. But as the CPI data came out, quick move up. Now, it's not similar to when we have the interest rates, the FOMC meetings, where you get the quick reversal, quick move one way and quickly reversed. I don't believe it's been the same with this, but what you had when you got up here was an SFP of the current day high, Asia high, that high that Magic pointed out. It's just over here on the left. So yeah, it was the current day high. So yeah, swing failed that, as well as you go to the 1 minute. The move up itself was not that strong. We're looking. the move up itself was not that strong. You didn't have any buyers initially in it. It was just a load of shorts effectively closing out. Could have been some buyers in there, of course, but overall, open interest down, delta positive means shorts closing out. Then you had a load of shorts come in, trying to get in a bit early. No real reason to jump into that position. Then the buyers came in and sustained the move a little bit higher. And then the reason that I jumped in is as you got below the SFP, you start to get below these buyers that have come in, heavy selling imbalances. You had your reasons to get in there. Heavy selling imbalances, clear delta switch up, some heavy negative delta coming in, trapping traders. Pretty simple stuff. This is on the 1 minute, so understandably it's harder to see on other time frames because on the 5 minute it wasn't really as clear. But pretty simple stuff to catch it. Yeah, you still had these selling balances and what have you. So you had many reasons to get there. And it was a really quick move down to the gold pocket. Looking at what we've got here, right now in front of us, you're slap bang in the middle, as Magic has said. And the problem that you have is there's positions on either side. So it really could go either way. You've got shorts that have entered here. You can see the open interest increases with the delta being negative. So the shorts in this region. There's also some buyers that have been coming into this region as well. You can see by the positive delta here and somewhat positive open interest there. But this also is actually some more shorts looking at the delta comparison to that. But the fact you've had the open interest increase, its positions on either sides. So really could go either way. And the fact that we've had this move down already, I think come up here and drawn in more shorts, it rather kind of made me favor coming in and taking out the top of this, though I prefer we not do that because I am in a short. But I think if we do start to lose the point of control for the range, now I actually don't have it up on my trading view, but the point of control, which is at, I think it's at 30,120, I believe it was, Magic. Pretty sure it was. But if we start to lose that region and really live below it, we'll call it the previous day equilibrium for now. If we start to live below that region, I really do see us coming down and testing the top of that. The first, this single print here, down at 29,789. Just call it 29,800 just to be sure. Because if you do that, you're going to be taking some of the lows from yesterday. So if I expand this, you're going to be coming in taking what are effectively, if you're drawing this up as a range, you've got if you're drawing a parallel channel, I would pull it from here across and, this low here. So we'd come and get a deviation and SFP of the lows of the range, if you ask me, of this region. So live below the point of control. And let me just merge this actually. Live below the point of control. Where's this got it at? This has got it at 30,094. Living below there, I really do think we're going to come down and test this region. But yeah, as Magic says, if you're not going to swing for there, I don't see this single print holding that much weight at all. I'm pretty sure I said this yesterday, but I don't think this one's of that much importance to me. It's this one here, which is really key. The reason being is purely the fact that you've had this price action here. I think this was the high from before. Pretty sure it was. It was in this region where you kind of ranged and it was teetering around that 29K mark. So the previous high was here. I've not got my mark levels up, but I'll tell you what I can do. Previous week, previous week high. We're going to pop it in. It's down here. So that's even further down. But I'm looking at this region as the more important one because if you break into them single prints, you're going to close that single print out, which kind of doesn't negate the previous week high, the fact that it's there, but it puts a lot more pressure on the fact that you've then broken into the single prints. But yeah, that would be the really key area for me to hold above the previous week high, I guess. But yeah, I don't really see this single print holding too much weight if we are to come down and test it. I think it's just going to be a quick close of that. It all comes down to where we, live on this current range, whether it's below the point of control or above it. But the high that was made last night, for those of you that recall yesterday's stream, pretty sure I did say that the high that we had was pretty shit. Oh, sorry, pretty mid. God, my language is awful. We're never going to make it big, Magic, because my language is just horrific. But yeah, look at this high. You don't have a finished auction, which is unfortunate. I'm sure if you played around with the ticks, you would. But the volume's way higher. Open interest drop was, much more. Initially it's only 4.8 because you had some more buying coming in that candle, which pulled the wick up. But you've got a much more significant volume and delta on that candle. So the high's pretty good. Wish it was a finished auction, but you're not always going to get them. And then you had a pretty nice, not initial delta switch up, but when the delta came in heavy, it really did run. So yeah, the high's pretty decent for now. I would rather it stayed that way as the high. But yeah, live above or below the point of control. What time frame do you use to?
You cut out.
Single print 4 hours. I've cut out.
Yeah, I'm using. No, I don't use. I use the 30-minute, and right now it's on. I moved it from 69 ticks to 10 ticks. But if I go to the 1 tick, it does change it a little bit. But yeah, who cares about that? Me, I wasn't reading the chat.
Can you
I'm
hear
an
me
idiot.
or not?
No, I couldn't hear you at all. But I'll highlight his question. Single print. We use the 30-minute.
Oh, it's because, for example, I'm just going to do the 2 hour because it's easier for me to click than have to add another one in. But it's just not going to give you the candles that you want. You don't even have a single print here. So TPO is traditionally done on the 30-minute time frame. So you can't really be like, oh, I'm going to use the hourly, or I keep cutting out, Magic. I don't know if you can hear me.
No, I can hear you just fine.
Okay. I'll keep talking, but I keep getting signs that I'm lagging out. But yeah, you can't really play around with the times, to be honest with you. It just isn't the same thing. So when you're looking at TPO, really, the theory is stick to 30 minutes. You can do intraday sessions if you've gone on Exo and drawn up your intraday sessions. You can then go into onto like the 5 minute or 15 minute and get single prints there. Do they work? I'm not 100% sure. They're certainly going to be a lot more risky than doing the traditional 30-minute single prints. But I have no doubt that there is some use case for them on an intraday time frame using a daily split of Asia, London, New York, and close, or whatever you want to call it. So if you were to do that split and go to a lower term time frame, by all means, I imagine there's certainly some credibility to using them. But if you're doing it, basics of TPO, stick to the 30-minute time frame. I alternate. I like the 1 tick because it tells me exactly where it is for the single prints. But you don't necessarily have to. You can use much higher to 50. You can really pick. I think when I made the course, I think I said 50. But I have as since dropped it down to 2, purely so that when I go and look at it, I can see, okay, this just quickly to the eye, I can see that it's $273 worth of single print effectively, because 2 ticks means $1, and that's why I've done that, just so it's more exact. So I'm just being picky with it, I guess. But yeah, what trades am I in? I'm in a quick little short I didn't get the best entry, but I'm in at where's my entry? I'm in at 30,344. So already hit take profit 1 and 2, stop losses at entry. I would like it to go and take me down to 29,800 personally. And I didn't catch the longs, regrettably, because then I could have been in both sides. But yeah, no.
I'm only in my long if we're talking leverage. Leverage position, I'm only exposed long from 16.6. I am taking intraday trades inside the range that I covered earlier. Starting to day trade a little bit more now that we've got a clean range to work with and some good volatility. So if I hold anything longer than that, I'll let you know. But I'm getting in and out right now with the day trading account, and then letting all my spot holdings and leverage long from January run for right now. That's it. Very simple. Trying not to overdo it and just enjoy the run, enjoy the Bitcoin run. See, look, we point at the sign. But are we good on order flow, or do you want me to move on? How do you want me to do it? I got ETH pulled up. That'll probably be the last thing we cover.
Yeah, do ETH, mate. I keep disconnecting part. I can't hear you.
Oh, I thought you were frozen, actually. So yeah, I'll go ahead and do Ethereum, and we're good to go. So Ethereum is 2620 basically. Just want to make sure we get this marked. That way people can jump to it when they'd like to. So we'll go ahead and share the screen. I was trying to update my charts a little bit here, and there's a lot of lines on this chart for right now. The ones that matter the most are right in front of us. This little zone of price action right here is pretty important. You can see that is your 6M2 from 2022, aka the 6-month average of price for that time frame, which is a 6-month. And then you have the yearly average just above it at the 12M1 at 1988. So this is a big area on the chart. If you were to take this to the left, and we reviewed price action prior, this is what it looks like, right? You can see it was support, support, resistance, resistance, and now we'd be looking like we need to get back above this level, okay? So again, the Q3 pivot, pretty important at 1842. It has been our support in this uptrend. And what I was doing is looking at this, if we get above this level, where might we find resistance above $2,000? You obviously cannot overlook the local high here, right? This is a big area at 2031. Main reason being is price likes to swing fail levels. And if it does, I think, that's going to present you with a really nice trade opportunity. I'm not really sure where I would pull from here, but I would, back to 1842 on a swing fail for sure is how I would be viewing that. And then anything lower than that, and we probably target the Q1 NPOC, and quarterly pivots come in also at the NPOC for Q1. So that's a big area down there at like 1625 to 1677, which was your Q4 high. If you recall, you go out to like the monthly here, you can see why it was so important, the Q4 high. Boom, boom, boom. Locally finally made the adjustment to get back above and challenge the July high yet again right here. And that was really your big change of behavior. So there's a lot to say that if we see a rejection out of this little box, or even at 2031, you have a good trade in your hand. However, if you don't see it, I do think the next targets can be found. So this was something that's been on my chart for a while. We haven't talked about it in a long time. It was a bullish bat recovery. This was your bottoming pattern. And so anyone that knows me knows I like to play with these a little bit. So you have two options here that you can do. You can do something like this, and then you could say that this is now a channel, and EQ is fairly well respected, and you're holding that EQ. What's it telling you? If you're holding the EQ, we're holding on to what? That Q3 pivot we just talked about. But if we lose the Q3 pivot, I'm actually going to start looking for that Q4 high and that Q1 low down at 1636 to 1677. But right now, you're challenging into those mean reversions, which is the 12M1 at 1988. That's still my target until, price does something to make me not think that it's going to go there. So while it's a really boring idea, because it's not that far away, because we're at what, 1922.80 right now. We're talking about a move $66 into the future. It's still a target because we haven't had that sign of weakness yet, that classic sign of weakness where we break down and, come lower. Now, everyone and their dog is probably talking about this. I know I call them old stock dogs. They're probably looking at some meme lines. I would say this is probably what they're looking at. And a lot of times what you get in situations like this is you'll get something like this above the line and then back below. Giving you a trigger for a quick long. However, if you don't take profits, usually you're going to get your shit pushed in on the way down. Because these just aren't the best places to be looking for longs. So looking at this, we could start projecting and saying, where might this take us in terms of the buildup? We're going to use a little Fibonacci, a little bit of the trend. We just need to see where is the trend at. If I were to use this, I'm going to get rid of this trend line, keep it somewhat clean. And you'll notice that this is your gold pocket. You've run into it, and now you're holding it as support. So again, further validating that 1842 level does need to hold, because if you start living below it, you're putting pressure back on the C leg pivot here, but also that July high we covered at 1785 previously. And then it's really not much of a short walk down into that NPOC, the quarterly pivot, etc. And then you have a really nice low here at the Q4 high to take as a swing fail potentially, if given, right? If given, I should say. Let's see what the yearly range looks like. Yeah, look at that. So again, you just cracked the gold pocket here on this asset. And I'm going to put a box right here now. And I'm just going to say that if price does not hold onto this zone of the chart, we should expect to not only see this, maybe a full rotation back to like 1400 and that previous all-time high. That would be a pretty big breakdown, and we would have to see Bitcoin giving up quite a bit of ground at that time. I'm not expecting that. I think it's the least likely of the scenarios. I would like to push through resistance just above us. We have a little mini range right here between 1842 and, believe it or not, 1946, couple like what, $120. Next leg up for me, you've got the 1-to-1 here. Let's take a look at C to D and see where that's going to take us. And look at that. There is your gold pocket expansion. So we now have fib confluence to say that while I'd be interested in 2365 up to 2457, maybe even a wick to 2600, I cannot overlook this golden ratio here just above the Q1 low. And this is a scenario we talked about, that ETH maybe doesn't break out as high if alts continue to bleed, and it does something like this and then comes back into the range. And that would be the bearish case. That's where you would be like, okay, this rally may be over, and I'm looking for a higher low, or I'm just looking for a better place to take a short position on a back test. So that's how I'd be looking at price and setting myself up for success. Now, this isn't a guaranteed short, because there are targets that are higher still. There are volume targets specifically that are much higher. So you can't just sit there and say that I'm going to take this trade, because if it doesn't present the reaction you need to see, like an SFP, reversal, things like that, well, you could find yourself in an underwater short pretty quick, because I know not everyone uses stop losses, because finding invalidation here is pretty hard. There really isn't anything to work off of there, right? There's nothing to work off invalidation here. So you have to wait for the trade to present itself, meaning that there has to be a setup. So it's just like what we talked about yesterday, when there was a gentleman and he said, when should we short? And Max replied, you have to wait for a setup, because there's really nowhere to validate the short. You have to have something that gives you a trigger for it. So you would need to see something like what you saw here. And this was a really classic case of, if you were just randomly shorting here, it's probably going to run your stop. But if you waited for the SFPs to come, you could short those. And where are you taking them? Back down to support, bottom of the range that's setting in. And you continue to do that until, that short was no longer a good short, right? So I would wait if you was looking for shorts on this one. I think this one's going to push to a 1988, maybe even take this high into that zone we just looked at. And I had it up at 2222, which is my number right there. So like $2,200, that's the trap zone for me. That is the one spot I would keep an eye on, but it may be a nothing burger. And we push into like this area here. I believe it's weekly area, or is it a daily? I bet it is a daily. Maybe I misheard there. Yeah, it is a daily, but you can also see on the monthly time frame, you've got nice wicks there showing you that on a daily scale, it did settle up here, but also on a high time frame scale. So you can see very clearly, this is your last daily settle up above the range. You do have an NPOC at 2365, and then you have this 6-month pivot above that at 2457. So that is an area of interest to me as of right now. But if it breaks, up above this level, you've got to be careful, because this is kind of a big move down very quickly. A lot of void there, and it was filled in on these 2 wicks and set in. So above 2457, while 2600 remains a target, I've got to start looking up. And 2835 becomes a thing. The March NPOC at 3000. Now we're talking like levels between 2939 up to 3K potentially. And I think that would be a justifiable target at that time. Yeah, I think if you break above this box here, you're probably going to see 3K. Would be my guess. would be my guess. Yeah, there's really nothing there. Yeah, you heard it here. So anything above 24.57 on a closing basis, and there's no reason to close your Ethereum holdings, in my opinion, until you see 28.35, 29.39. Then you're scaling out in this region, in my opinion. But I've been wrong before. Last thing I want to do is take a look at a pitchfork for this, just to see where we're at. And we're probably going to look at both a channel version and then the original, which is your trend. So this is I believe this is modified shift. That's what we want. Yeah, it's the modified. Just if you were to draw this as a channel like we did before, it's essentially the exact same projection, only it's giving us an EQ right here on the upper and lower bounds of it. So that's why I like this. You can see the settings are 0.5 and 1. So we have a 50% mark. So we can gauge where the EQ is of this big gap here. And same for the upside. And what does it tell us? It tells us that we should be looking up above 2031, this local high for A. And it also tells us that if it goes any higher than that, where are we looking to project out to? Sometime in the middle of summer, probably looking for this high over time. And right now, altcoins aren't that sexy to trade just because, well, I think Bitcoin dominance is doing its thing pretty well right now, if I recall. And I think that is on this chart here. I'm trying to remember where I put dominance, but I think it is on this one. I'm almost positive I put it on this guy. And we'll take one look at that. And so what did we talk about on Bitcoin dominance, right? We said we want to see the 2022 high taken, which we have. And now we want to see a closure back inside of this, right? So if we see the rejection here, right, you can see this is your 2022 high. Also a very, very nice, strong level for the upside. And I believe we had a really nice volume profile that may or may not be relevant. We're still not sure. I think the debate is still out on that. Yeah, you can see that this is the low here of our move, also the point of control. And 44% appears to be pretty good support as well. So we'll keep that in the back of our mind. But if we started breaking up here, like we said, above the level, and then you do something like this, we start targeting 44% and 42%. And that's where altcoins have their chance to do their thing. But really not until you see something like that, because Bitcoin could very easily come in here, just range around, and then make its move up, like in terms of dominance. So for me, these are still targets until we see that sign of weakness out of this chart, which we haven't seen yet, which also tells me that maybe I should be looking for some form of resistance up here for potential shorts. Because if Bitcoin dominance is going up, the USD pairs aren't going to exactly suffer. But they're not going to boom either. We got to wait for that Bitcoin dominance to roll back into alts. And once it does, these targets to the upside become very real: 2220, 2365, 2457. And then we're looking up, up, and up. And that would imply Bitcoin's probably putting in a pretty big distribution top at that time on this rally, because this has been an aggressive rally, right? This has been very aggressive. But we don't want to get too far ahead of ourselves. Calling tops on things like this can be detrimental, because everyone that called the top here and here and here, well, this was actually a pretty good one, and we did call that top. But in right here, a lot of people calling this a top, even though there was nothing to show you that it was going to be a top. You've got to wait for that, big phase. One thing people don't want to talk about is that ranges oftentimes. So this is a big long range. This is a nice big long range. It's probably a little bit smaller than this one. This is a really big range, but it's smaller than this one. So when you see a blow off top, the best way to look at this was 2019, actually. It's a very good way to look at it. Note that your ranges are just getting larger than smaller before price really starts moving quickly. And the same thing happened during the bull market. Okay. So you have a really big, you could pretty much call this down to here a big range. Then you've got the biggest range for accumulation, another really big range right here of accumulation, but it's smaller than this one. Leads into another range of accumulation after expansion right here, but it's smaller than this section of price here. Another smaller section of accumulation. So think of it like throwing a ball in the air, right? What happened that led to us thinking that this would eventually be a top, that this was an area for a top, besides all the obvious Fibonacci targets? This right here was the giveaway. This section of price started it, but this is the giveaway. And the reason it was is because you were moving faster and faster in shorter and shorter ranges until when? About this time frame, okay? And that was actually a big macro fib date for us as well in terms of Fibonacci time. It was like the 8th of January or something. Yeah, right here. And ranges started getting longer. And that's because now distribution is taking place. And this put in a giant range. And then you saw another big range, smaller range. And then finally got your first really large range, which was what? Accumulation. And so you're looking at the same thing. Accumulation, another big range, but it's still shorter than the one that at the bottom here potentially. Another big range, but it's shorter than this one. We expect another range. If the ranges start getting longer and broader, but price isn't making new highs, we have to look at the possibility that maybe this is distribution and we should be looking to take the opposing side at that time. But just shorting stuff to short stuff is fucking stupid, for lack of a better term. And that's not to be rude to anyone, but it's like throwing a tennis ball in the air. You know, the tennis ball is going very, very quick. What happens as it gets to the top of its trajectory? Price starts to slow down. Tennis ball starts to slow down, right? It gets up to the top, it's slowing down. So we're not moving nearly as fast anymore. And then it rolls over and it picks up steam again, right? So very similar concept to price. So if we start putting in a huge range, maybe
in physics class.
Huh?
We're in a physics class.
Yeah, E equals MC squared. No.
Oh my.
Yeah, no. But you know, it is what it is. You know, that's it's the exact same concept, to be honest with you. But that's what I'd be looking for, is a really big topping pattern. And I believe we saw that over here even, you know, short of the China pump, right? When you made this move up, what did you do? You had a really big change of behavior. So the ranges are getting smaller and prices moving faster and faster as the ranges get smaller, giving you that blow off top. Then what do? Massive descending triangle, obvious distribution. This is where I made some of the most money, was just shorting this thing down to support, playing the divergences as they appeared, trading it back to the inefficiency, which is a Q3 NPOC from 2019. That was where you were looking for, right? So you had your target. It was very simple. July 1st, I believe, out to the end of September. We don't need that on. And there you go. This was your inefficiency, right? This is all we were looking for. Boom. So that was what blocked price for the longest period of time. And every time you got up to these levels short of this one here, you got topping patterns. This was an ugly head and shoulders breakdown, back test, down it goes, right? So honestly, we probably should have just traded the yearly VWAP the entire time looking at it. But yeah, very, very simple idea. Really quick move up, big distribution range, down. The only time that didn't happen was right here. You finally got higher lows in your distribution range, and you were putting pressure on. It was the third time being up at that level, 120 plus days, I believe, in this triangle before breaking up, getting a back test, and then moving on with your life. So we'll be looking for something similar, you know, till we either see a definitive sign of weakness, or B, something that resembles a topping pattern. It's hard to be too bearish on price. You have to be patient. So doesn't mean you can't take shorts and say this has potential. Like if you took the short up here and your stop loss is above the high like Max, you know, this could potentially turn into a good trade because it has this ability to come back and back test. And that makes for a really great take profit, but you don't have to close all of it. That's how you create runners that you can hold on to for weeks at a time sometimes. Because if we break through these levels here at 29 or 28,726 in the previous week high as of right now, which will change obviously, you've really got the potential to run back down to like 26,724 at that time. If you were to break
Don't get me excited. Still getting
well,
excited.
I'm just walking you through how that trade can develop if it's going to, right? So you start breaking back. I mean, it's so far away, it's almost not worth talking about, but that's a sign of weakness. And then you know what you'd look for? Let's say this is the top. Hypothetically, let's just throw it all out there. This is the top, right? You shorted right here, and we go, well, we never got our big range. No, you're about to get your big range. Boom, right? That's what you're going to get in that scenario. More than likely, it seems like. You'll get the sign of weakness, classic sign of weakness. It won't be nearly as clean as that cock and balls there, but it would be some form of distribution probably. Because what are the odds that you put in a bull flag from March 16th to whenever, however long that takes, like maybe it takes us all the way into May, a 2-month bull flag at this stage is pretty unlikely. You're more than likely putting in distribution, and it could be, you know, it could be something like this. you know, and you could do something like this, or I guess the more implied one would be something like this actually, and then down, take these guys out. But that's how you'd be looking at it. You know, that would be the sign of weakness in the price that you'd be looking for. And you don't have to trade the breakdown. You just have to understand that resistance is moving down with price at that time. And I should be taking shorts here back down to support and putting my stop loss above the high so I don't get burned if this doesn't play out, right? But until we get something like that, it's hard to be bearish on price. We have to find our way below 28,726, in my opinion, and live there. Otherwise, it's a moot point, but yeah, that's when market structure starts to change. Otherwise, yeah, these targets remain valid until price says they're not, and that's how we should look at the market. That's the best way to look at it. So, well, I guess I should say it's my opinion, the best way to look at it. That doesn't mean anything. It's only my opinion. But I don't have anything else. We've been going for 45 minutes. There are 30 of you in here. Hopefully, you guys enjoyed it. Sorry for rambling here at the end, but there's always a nugget or two. Max has got something to add. Oh, we didn't cover any CPI data, did we?
Yeah. So the CPI data came out good for us. Effectively, it says red here because this is a forex site. So they mark it green if it's good for the dollar and the currencies, and red if it's bad. So effectively, it's good for us. But the one thing that I actually wanted to mention, because it's actually relevant now. I'd say this has already been and done in the price action. But what I wanted to highlight was the FOMC meetings. Now it's coming in about 3 hours. This is actually, I don't know what time frame this is set to. If I update it, it'll say 10 p.m. It's Eastern, yeah.
Yeah.
So this is 10 p.m. my time. So I know.
Yeah, it's a release of the minutes from the last meeting, so we can read them. You can
You
find.
normally get a bit of volatility on it.
Yeah.
So if you are day trading, it'll be a good time to be there and be about. See what price action's doing right now. I know Twin, if he's in it, so he doesn't like trading liquidations. The market moves between liquidations. So we've had our long liquidations come up, had our short liquidations. Now we've had the short liquidations. I think price is going to come and seek more long liquidations. Where they will be, you can't really tell. Definitively, there's no real way to tell. But easiest way is to look at lows, highs and lows, and pick them. So with the fact we've had some short liquidations and it's now seeking the long. So if you're in a short, quid's in for now.
Yeah.
But yeah, I've got nothing else
Johnny or Edgar has one question about 29,873. We'll go to the weekly. You look left. There was a weekly NPOC here, and then there was also a quarter 2 NPOC here. I've already deleted them because they're now tapped. And it lined up nicely with our last weekly breakdown right here. So that's where this box was generated from, was quarter 2 from 2022 on the breakdown, I believe. Oh man, do I even have it? Man, me and Trading View are going to have a serious talk at some point, because I don't have quarter 2 here. I have all the other quarters, but that one, it doesn't matter. You get my point. There were 2 NPOCs that were left over there, and then you had your weekly level that was there as far as a breaker. So I just marked it off as a box, knowing this would be an area of interest. So that's how I derived that level. And it's really panned out to be an absolutely phenomenal trading level thus far. But as Max has said, Bitcoin is a liquidity whore. And that's what it's going to want to seek out, is where can it get liquidations? Where can we get the most pain? So below this level, you have your single prints. So we have our initial targets down to 29.3, and then all the way down here back into this blue box here, which if lost, I start to look at this as potentially a much larger range that's going to be put in, and we can evaluate at that time, which I don't think is a good thing for Bitcoin. To come back and lose this box. I think that could be a sign of weakness. I've been wrong before, though, and I'm open to being wrong again. So, take that for what it's worth, guys. Yeah, I got nothing else. We're 49
I'm in a pretty big short, so I hope you're right.
Yeah. Well, I wouldn't say I'm yeah, I don't know if I'm right, but yeah. But it's giving you ample opportunities to get in shorts up here. And now I'm kind of kicking myself for taking the 2 shorts and not holding them. But they were meant to be day trades, and that's what I did. So Yeah. All right, guys. So you guys know the drill. Leadingcrypto.io. We have a little QR code that Max will put up in a second. If you're interested in learning about how to use some of these tools, also gets you into the education portion of the Discord, all the videos, all that stuff. You can go ahead and take a look. Otherwise, we will see you guys tomorrow. Do me a favor. If you haven't already, before you go, hit the like button. And if you could be so kind after the video, you can always leave a comment. I respond to every comment. That's actually how I judge if our message is getting out there, is comments, likes, interactions. So much appreciated. You guys have a fantastic, it is Wednesday, right? Yeah, fantastic hump day.